Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Thick.
I've bid a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Friday edition of Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Thick on the show today. Lots of news to discuss. Two guests for you. One at 8:35, Ron Bienvenu. He's the managing member at Spearpoint Capital. He's an activist, investor, and a short seller. And then at 9, we're going to be joined by Gordon Johnson, managing director at Axiom Capital, to discuss with us the impending tariffs news in the solar industry. But before we get to that, we've got to talk about the news of the day. Equifax getting an upgrade today. Sprint and T-Mobile looks like it is close. We have a couple earnings to discuss as well. KMX and Finish Line are reporting. So Joel, what's doing in the markets?
Little dip overnight to 24.92, but buy the dippers came back in again, trading mid-range on the session. I got two levels on the upside. The close from yesterday, 25.01. That's a good level. And then, folks, we got a hard top in the S&Ps. We'll talk about this with Dennis when he comes in. We have 1, 2, 3, 4 highs in a row within a point range. So someone's making a stand here in the S&Ps. Gold back under 1,300 now, though up 340 at 1298.20. So that was a brief trip into the 1,300 handle. Looks like we've been down 7 out of 9 days here in gold. And silver, 1701. That run over 18, short-lived as well here. We've had trying to find some support here at 17 in the silver market. Dennis, how are you doing on this Friday morning, September 22nd?
Just looking here. BTFD again, Joel, last night. You know, those S&P futures, when they pull back 6-7 points, is just a buying opportunity.
Did you read my article? Is that why hydrogen bombs are bullish, right?
Did you say hydrogen bombs?
No, I didn't. No, I didn't. I didn't go anything bombs. I
tweeted it out. It was buy. So what is the saying again? What's the traditional saying?
The traditional saying is sell Rosh Hashanah, buy Yom Kippur.
And you changed to buy Rosh Hashanah, buy Yom Kippur. Just buy. Everything is bullish. Buy. That's kind of this market. That's what do they do? Buy.
Exactly.
So post your article, Spencer, if you can, in the chat there, because it's pretty good. He had a lot of, Joel, a lot of different things in that article. Reasons the market could worry, but reasons the market doesn't care.
Right. So why miss
out?
Why miss out on something bad happening and making the market go up?
Well, we know, like, if you have a nuclear war going on, well, that's going to, just think about, what World War II did back in the day. That got us out of the Depression. World War III will propel us to Dow 30,000.
30.
No doubt. We talked about this yesterday. Then it's down 1 million.
Oh yeah, Dow 1 million.
We talked about this yesterday.
You missed that discussion, Joel. The Dow 1 million, when we were discussing how are we getting there. That doesn't matter anyways. It just goes up. So maybe I should just change I was saying, I was given the argument that I don't know where the growth comes from because population isn't growing like it used to. So I don't know where this increase in corporate profits go. But, then other people, and I'll say market goes up no matter what anyway. So maybe that is the case. Maybe I shouldn't try to rationalize it. I should just accept it that eventually we'll be at Dow 1 million and go with Warren Buffett's theory.
I sent it over to Kenny Glick. I have yet to get his reaction, but I'd like to see what he thinks of it. But anyways, we do have some morning movers to discuss. Where would you like to start?
You know what? Let's start with Equifax because EFX here we know has been in the gutter. We've been saying it stopped going down the last couple of days in the show. It wasn't making new lows, and actually, just quietly here putting a little 4-day up move. Well, Wells Fargo took note here, Spencer, because Wells Fargo coming out this morning and upgrading the stock. The first analyst to defend Equifax pushes it over $100 a share. Was there any specifics? They give a price target, anything from that note, Spencer? EFX.
I haven't seen anything specific on it, just an upgrade.
Okay, upgraded though. EFX, Wells Fargo, that's your catalyst. Stock trading up $2.75 here in the pre-market. Joel, technical thoughts here from this most hated stock a week ago is starting to be loved again.
Well, I think I talked about this on, I was not here on Thursday, on Wednesday, that you might have been getting a little bit of seller's exhaustion because, you had the big volume down days, and then lo and behold, you have a red dog reversal on Tuesday, 92.08, you go to 91.88, and then you close back above there. So sellers get a little bit tired, and you get a little bit of a rally. Now you got the upgrade. We're traded back. Are we traded back in double digits here? Let me go to the pre-market chart, and we have a high of 102. I don't know, stays in triple digits maybe, but what about all these people that actually got this on the cheap, under 100, just looking for a scalp? I think they're taking some profits here. I don't see this thing going right back to 105, 110 today. I'd say everyone that picked it up over the last 5 days is going to be fading this move.
Yeah, it's going to be a little bit of a tough slide. The only thing it went down through fast, it could have go up through fast. Could we get a little bit of a reprieve? It's hard to come here and say I'm just going to sell short 100 because really, where's your out? This thing was $140 3 weeks ago, so it's difficult just coming here and pick your point and say, okay, well, this is going to be the top. It's going to start going down here again. The whole thing was, and we mentioned this on the show 3 or 4 days ago, had some bad headlines, stopped going down on bad headlines. When the stocks stopped going down on bad headlines, that's when you want to take note. That was 3 or 4 days ago. We got another headline, that the hack might have been a lot earlier than what they had said originally. And we closed up that day on that. And that was your sign. That was your tell that's saying, hey, maybe this thing actually wants to try to rally a bit here. And we've rallied since then. That was our $94 and we're up over 100 now. So, now I'm sitting here and looking kind of in the middle of nowhere because if I'm buying it here, you got to give yourself down to the 90, and I don't like giving myself 10 points. And if you're selling it short here, you really got to give yourself all the way up to like the 116 area. I mean, 111, 112. It's tough to just call it. So there's nothing in here. There's nothing between 100 and 110. There's not a lot of reference points. So that's why I think I just, hands off on it at this price. Gets into the mid 90s again, come back and maybe, retest those lows, maybe get interested for a bottom. But this has major headline risk all over it too.
Exactly.
So, the headlines aren't done here yet. There's going to be more headlines to come out on this. So I think when you're trading at $100.35, I think it's in the middle of nowhere. I think there's better setups out there.
And, just I need to pull up a chart of CMG to let people know once a stock is in the news and it can't get out of the news. Who knows if there's going to be, but it's just that risk of owning stock with the headline news that you saw what it's done to CMG. So hands off for me on this one, long side and short side.
DC, she wants to know about ICPT. She's told us ICPT. So we will talk ICPT, DC, just for you. Stock trading down 2% in the pre-market. Here's another one. You think, okay, well, it's starting to get too cheap. I'm just going to buy it. But like we were saying, I've learned this the hard way. I said it, I think, yesterday on the show. It's hard to catch those falling knives. It's hard to call the absolute bottom, and the thing's in free fall. Like I'm gonna, wait on this until it stops going down, and it hasn't stopped going down yet. Like if you look and use EFX as an example, completely different company, but a stock that got killed as well. You had multiple times, multiple days where this thing bottomed at 92, 91.88, 93.10. It stopped going down for 3 or 4 days. That was the time to maybe pop in there. Now you look at ICBT. Well, I'm going to wait the same thing. I want to wait till it stops going down. We just had one day. Harlan Pine said something great on the show yesterday. He says, when you fall off a 10-story building, you don't get up and just walk away. And, that's what he was arguing. It takes some time. The chart needs to rebuild itself a little bit here. And it hasn't even stopped going down yet. So I'm hands off on this one. I'm going to let the dust settle. Is it, cheaper than it was obviously when it was $500 a share? Yes, but maybe it should have never ever been that high. So they've got some bad news. What was the headline that drove this down yesterday, by the way, Spencer, just to enlighten our listeners?
So
ICPT.
So there's actually a few headlines at around 10:55, 11 o'clock. Traders were talking about a potential warning letter that was sent from the FDA to ICPT related to their liver treatment. And that was the catalyst that hit the stock down.
Murdered it.
Yep. And then we have Adam Fierstein with a landing tweet later in the day. He's a reporter for Stat News at 2:30. He said, at this point, ICPT is probably asking the sell side to stop defending it. It's only making the situation worse.
You just keep hitting the stock, even
Yeah.
though the analysts come out and say buy.
And then you have Wells
Anyway,
Fargo.
72.35, 71.65. I know Ace is saying in the chat. Ace does well, picking, going in there and bottom and fishing, and he's makes some pretty good trades on that. But there's not a lot of traders, I'll tell you, out there that can successfully do it. I'm not one of them. I've never been able to go and call the bottom. Maybe sometimes you get lucky, but I've always found I need a better setup than this. And when stock's still going down, I'm hands off. It's tricky to just call the absolute bottom.
Harry remembers, some kind of range changes and whatnot. This one just sticks out of my head. I got to go to the monthly chart here. Remember we had that run to 497? That was in January of 2014.
It was crazy, man.
I still remember this, and I just went back and I looked it up in my trusty Benzinga Pro. This was on January 10th of 2014. Bank of America came out, or they maintained their buy rating, and they raised their target. Dennis, are you sitting down on this one?
What was their target?
They raised their target from 81 to 872.
And that's what they did. And now it's $73. Where's that analyst? Who is that analyst?
I don't know. I'm going to go through this and see.
And that's what really drove it. I do remember a crazy analyst like that doing that.
Yep.
And, sometimes some of the analysts are really good, and then some of them just chase price. And that was an example. The stock was going up. It went up a couple 100 points, and they're just like, oh, wow, we can really throw a huge price target on this now. And here it is a year or 2 years later, 3 years later now, and it's $73. So that $800 price target is not happening.
And then this is weird, too, because I don't see any action while it crashed. But then in December of that year, Bank of America restated it at a buy with reinstated it at a buy, and they had a prior price target at 0, and they changed it to 188. So they must have swept someone out the door on that one that made that 872 call and brought someone in new. But
probably.
Yeah.
It's a bold call, and you're an analyst, you're making those bold calls like that, and you're dead wrong. Your job could be in jeopardy.
Yeah, they have
a tough job. We pick on the analysts a lot, but they do have a tough job, Joel.
Yep.
Yeah, here they are, they're trying to do their fundamental research, and a lot of times things just don't trade fundamentally, you can crunch the numbers all you want, figure out, okay, this and that. And a lot of times it's just momentum driving stocks, and it's supply and demand. And if the stock is hot, and the stock can remain hot a long time, and maybe it's not justified fundamentally, and you can crunch those numbers and look at your balance sheet and look at your income statements and look at your growth rates, look at your cash flow, all you want. If the stock is just, in a hot streak, it's going to keep going up. If it's in, a downtrend, hard downtrend, they're persistent, those trends. So it's a tough job for the analysts because they're trying to do it all fundamentally for the most part. I know there's some technical analysts out there, but for the most part, they're mostly sticking usually to the fundamentals, maybe with little technicals on the side. And it's hard. It's tough. In this market, it's tough because a lot of times fundamentals just don't seem to matter.
Right. All right. We do, believe it or not, this late, we do have some earnings to talk about. Yeah.
Finish line. Are they finished or what? Like, come on. Every time this stock reports, it goes down 10%. Well, it's only down 6.5%. So I guess it's like a win for finish line. FINL, give us a detail, Spencer.
Q2 adjusted EPS 12 cents is in line with the estimate. Sales of $469.4 versus $470.5 million. So a little bit light on that. They did, however, reaffirm their guidance for the fiscal year of 2018. EPS for that coming in line with the estimate. Q3.
What are they projecting?
They're projecting fiscal year EPS of let me get it, 50 to 60 cents. 57 cents was the estimate, so it's in line with the estimate there. Their Q3 comps, they're projected to be down 3 to 5%.
Comps still falling. We know the mall traffic is down. You can see, and Joel had this call with TCO, Taubman Centers, when it was $73. Like, why is this not going down? Just had to get some long-term puts on that, Joel. You'd have been making some money on that TCO, but mall traffic just destroyed, and it's killing these stocks. Finish line, obviously one of those. I just can't see, Foot Locker, obviously we've already had a bloodbath in that stock. It's down a little bit more here today, but I don't know. Finish line, 850. When you do the math, okay, let's say when are they supposed to make 50 cents? What is that? That 2018 you said?
Yeah, for fiscal year 2018, 50 to 60 cents is the
All right,
EPS.
so 50 to 60 cents. They seem to always come in on the low end of these estimates. Let's say 50. Stock's $8. It's still trading with a multiple. What's the air math on that, Joel? It's still 16 or something.
Yeah,
17.
I don't see how
It's the sales are falling here, and you're going to trade with a market multiple. It's scary. Maybe eventually they can turn around and start, get pumping those sales again. But Amazon is just eating lunch here, left, right, and center in these retailers, and I just can't. I can't see coming in here, and just saying, okay, well, it's going to come right back. Can there be short squeezes? Yes. Can there be bounces? Well, sure there can. There was a bounce, nice bounce from 690 up to over $10. Bounces, I believe, are to be sold. So I'm more of a sell the rip than buy the dip on this thing.
And I will look at the pre-market action, and I'll tell you have found a little buyer in here over the last 3-4 brackets. Just hanging in here, 838. That's been the low of the move. And just buyer stepping up, 838, 840. So there is some support there. You have a daily low at 834.2 and another closer to $8. Low of the move's been 690, and we got a pop toward 11. Call that a $4 move. So you need to get not quite 1066. So for me, like probably the 850, 860 level is where your 50% tracement comes in. So that's what you need.
Good point.
Yep. A little bit of a pullback here. Doesn't look like they're hitting it towards the low of the move. So I still, you could do the exact math on it. It was less than it was $3.50, so $1.50. So right there, 840, 850. I expect it to hang in there today. I don't see this thing going 750 and then low of the move 690. Just from a short perspective, people bringing it in, not talking about new money coming in.
A lot of bad stuff's been priced on these things that's been murdered. I mean, it's a good point you're making. When you put it in perspective, at the beginning of 2017, the stock was $23. It's now $8. They've punished and murdered it. I mean, are they going to continue? Sometimes they actually rally them on these, crappy reports.
We've seen that.
But I'm not going to be participating in those rallies because those rallies often fade as well. So, 50% retracement that move, maybe there's an argument there that shorts might hold it up, and maybe, there's a few people looking, on the pullback here to get some exposure to some, shoe stores, but not me. I'm out, but easier, that's what and that's the one thing about my trading is I'm always looking for the better stuff, the easier trade, as opposed to, trying to trade these earning stocks. I like trading the sympathy moves. I like trading, not even the leader, because, if you have a stock that reports like Foot Locker, well, it brings down Nike. And a lot of times, it takes, a few minutes sometimes even for those sympathy moves to start working. But, that's always been the way. And sometimes, it even takes till the open. Sometimes you get an open just a little bit too high on some stocks. Now, is Finish Line going to drive down the entire shoe sector here today? It has already been driven down. I mean, look at the Foot Locker chart, FL. You can argue, that, this is horrible news for Foot Locker because Finish Line sales are garbage. Well, Foot Locker's already been priced in. It's, got down to $31.56, $70 4 months ago. So, can it drive it down eventually to the lows? Is it going to retest those lows? Probably, but I don't know if it's going to be the day. I don't know if they're going to hit this thing down $2 because Finish Line had a crappy report.
Oh, look at Skechers just hanging on. Oh, hanging on a cliff.
The Reverend still short?
I don't know if the Rev is still short this one. I know he's traded in and out of the position, but look at this. It had the nice pop from 23 to 30, and now just hanging out here at 25.5. So look for that level. And Nike, what a weird looking chart. Nike, have you looked at the daily on that one in a while, Dennis? Gaps up, gaps down, holding 52 to 54 has been the range. But man,
somebody defended Nike yesterday. Who was it? Somebody came out and said something. I thought somebody, maybe I'm just making that up, but I thought somebody defended it. Anyways, one thing to consider on Nike: bring up the monthly on Foot Locker, bring up the monthly on Finish Line. Bring up and I'm talking going out, to like 2012, 2013, 2014. Bring up the monthlies on Under Armour, UAA. Bring up the monthlies on even, Lululemon. You bring up the monthlies on Nike. In the last 5 years, Nike's went from 20. It's still $53. It's still up a lot, considering where it was. If Nike can ever breach that $50 with some volume, I think it could start going into free fall again. Now we're still range bound. We've been between 50 and 60 for the better part of 2 years here on Nike. So it's trade the range until that range is broken. But I'm just saying they have not hit Nike nearly as hard as some of these other ones. And maybe that's because Nike's going to start selling their shoes on online on Amazon. Maybe they're going to start, they don't have the physical stores, as much as obviously. Do they have physical stores, first of all? I guess they do.
Heck yeah. They got one. Actually,
but they sell in all other venues too. They're actually, make the shoes, as opposed to like Foot Locker that's got the shoe store that sells the shoes. It's a little bit different story, but Nike's held up not bad. Everybody's trashed Nike a lot. But really, when you consider the last 5 years and how bad retail's been hit, Nike's held up okay.
Yeah, you mentioned that 50 to 60 trading range, and we've been in that for almost or a little over a year and a half. 60 every time it gets above that, you found sellers. Hasn't quite breached that $50 level yet. You see the August 24th flash crash low, but the daily or the monthly looks a lot easier to interpret than the daily chart here. So keeping a long-term eye on Nike, the $50 area. Also, Barron's came out not last week, but the week before and really trashed it. That didn't really hit it yet, but that's an interesting chart from a long-term perspective.
The other company that reported here this morning, CarMax, KMX, and you know what? This stock is right there. Holy cow! This stock this is right near all-time highs. Nah, I guess 75.40 it got to back in April 2015, but not far off all-time highs. CarMax has actually held up quite well. Spencer, details. KMX taking out the 70 resistance.
98 cents versus 95 cents. Sales of 4.39 bill versus $4.25 billion. So beat on top, beat on the bottom. Comps up 5.3%.
KMX through 70, Joel. Thoughts on this chart?
Well, let's see here. We got that's a nice looking chart here. Just hit 70.90, pull back here off that print. Currently trading 70.65. Let's go to your dailies. Taking out, I like to see it stay above 70 here. We are firmly above it. Former high of the move, 69 from yesterday, 69.98. So I like it above 70 here. If not, back at fill, maybe down to the close yesterday of 68.84. But this looks like it has some momentum to the upside. 70's even been longer term has been a big level going back to July of 2015. You did punch through 70 once and you got to, let's see, what was that high right there? That high was 71.5. So you got a couple levels above 70 long-term resistance point. Let's see if it can hold at least through the first bracket.
All right. Other stocks that are in the news here this morning, Sprint and T-Mobile. Reuters reporting that this deal is getting closer. Is any more details there, Spencer, or just that Reuters report that the deal's close?
Just the report that the deal is close right now.
Okay. So Sprint getting a little bit of a pop. We know this has been, the worst cups here. They've talked about this for a long time. T-Mobile Sprint got big pops there 2-3 days ago because it was getting reported that the deal is close. Getting reported again that the deal is close. This actually propelled AT&T and Verizon as well. It's actually lifting AT&T and Verizon again here this morning. I guess they like the consolidation in the industry here. Sprint is trading up 3% on this. T-Mobile is trading up about 1.5%. The only problem is we've seen this before that they've said the deal's closed and then didn't materialize. So, when you're coming in here and buying this, on the speculation that the deal's going to get done, the question is, first of all, what's the price going to be? Is it going to be, the kind of premium that maybe, Sprint shareholders would want? Secondly, is it actually going to get done, or are we going to, they're going to talk like it's going to get done again and then fall apart at the last minute?
Not much of a premium, Dennis. I mean, you did have that run and Sprint ahead of it, but I just don't see the premium. I personally don't see why AT&T and Verizon are going up on this because no one's going to be buying those companies. I'm not sure what the reason. I'm going to be keeping.
They must have liked the consolidation. It doesn't make a hell of a lot of sense to me either. Like, my opinion on AT&T and Verizon, like I was always, I own AT&T in my invest portfolio, but this has been a hell of a run now. I mean, Verizon really was $43 back in July. It's $49 now. I don't know, interest rates still, talking about going up. These things usually trade like bonds, are getting a nice lift off this deal. I'm a seller of both of these. I'm holding AT&T in my invest portfolio just because I've had it in there for a decade. But I'll tell you, from a trading perspective, I don't like either of these. I don't like Verizon at 50. I think it's going to be a brick wall. And you're 49.25 here this morning. AT&T, same thing. If it ever got up near 40, it's going to be a brick wall up there too. So you're a little ways away from the major resistance. But these have had big runs in an environment where interest rates are going to rise. When the dust settles, it's still interest rates, believe it or not, that drive these two companies because they trade like bonds. And if interest rates are going higher, I can't see AT&T and Verizon, just hanging out here, at the highs of the move. I think eventually they'll start to hit two, just like some of the utility stocks have hit recently.
Yeah, boy, oh boy, if you were paying attention to the high that you had in Verizon after their good earnings report and the follow-through run on the upside, you had a good number for yourself there to keep an eye on. 49.63. That was your high on August 1st. That was about 3-4 days after the good report. And you see the volatility. It took it back down. But look at the run. Where does it get to on Wednesday? It gets to 49.64. 1 penny above that. And then the sellers ganged up at 49.50. So Dennis, I don't think you're going to see 50 on this move. Where are we currently trading? We're currently trading at 48. We're 49.11. I mean,
look at the way he tries to spin this. I just said, look at the way. This is how Joel tries to trick you. I just said I'd be sellers up here. Now he's trying to make me make a bullish bet on it because it's 8:26 in the morning. He's trying to confuse me here. I'm a seller 48.94. I'm a seller 49.05, 49.25, and I think 50 is a brick wall. I am bearish this stock, and you're trying to make me make a bullish bet on it. You are sneaky, Joel. Joel Alconin, you are sneaky. You're trying to confuse me. Just because I'm 41 doesn't mean I'm senile.
You know what? This is kind of like at home. Sometimes I get in trouble for things that I didn't even say.
You were going to propose a bet.
But you don't know that. You don't know that. How do you know? Maybe I was going to take. Maybe I think it's. I think it's going to take. I'm going to switch it around. Then it's going to go to 50 here, and I'll take the ag.
I think it could go to 50.
Okay.
I would love to get a short on near 50.
All right, I can't take it. All right, you're too good, Dennis. Hey, man, I'm rusty from a day off. I got to start.
Because you know what? I'm going to short Verizon if it gets to 50. I think I'm going to.
I know. It ain't getting to 50.
I just think it sets up well. I think it's up here on these deal news. I think interest rates, they've talked, they're going to stick to their, why not? Why not raise? We talked about this yesterday on the show. Why not raise interest rates a little bit? I mean, now is the time. With bonds have been getting hit, interest rate sensitive stuff has been getting hit. Banks have been rallying. Why give Verizon and AT&T the pass? Because there's a potential deal for T-Mobile and Sprint on the table. I think it's a dumb reason. I think the market's wrong on this. I think Verizon and AT&T, I think Verizon more than anything at $50. It's major technical resistance level and sets up well for a short trade.
Okay, we agree on this one, Dennis. So I'm not going to try and spin it any other way. You got me. I'm back in the corner. Okay, what stock do you want to talk about next?
All right, move over to Apple. $150. I said yesterday on the show, it could test it. It's halfway there. I think it does test it. I think it's going to 150. Own it in my invest portfolio. Still love the company long term. Might actually be a buyer of the pullback if it can pull back a little bit further. No, I'm cheap though. I wanted to buy the Costco pullback too. I tried to wait for another 5 points. I shouldn't have did that. I should have pulled the trigger at the 150. So maybe I should be pulling the trigger if Apple gets to 150. But I would love to get it back in the mid 140s.
This one, I'm really kicking myself on. I saw, trying to get my days and nights here confused. I saw Gene Munster on CNBC. I think it was on Tuesday or Wednesday. And he was saying this stock, he's looking for a 5 to 10% correction. And I looked at the chart. It had to have been on Tuesday. And I sent him an email. I said, Gene, I'm signing you at this one, but until it takes out 158, I think you got to stay in the bullish camp. 1, 2, 3, 4, 5 days in a row holds 158. And then on Wednesday, you blinked, you missed that. I still got my order in there at 158 to short it. It took out all that support and then it was gone. So 150 come down and come to pop up, fill that gap down there at the 150 area. And boy, that was a quick move. And, just coming off the event and everything, I heard there might have been some potential problems with the watch, but there's a setup that I love to keep my eye on. I mean, you even had a low at 158 in late August, and then all those lows at that level, and then boom, it takes you. I mean, there's a little gap there, but boy, oh boy, what a quick move here in Apple. Both of us are looking for 150 on the downside.
Jump over here to General Electric in the chat. We've got Spinner talking about call buying in it. I did not see the call buying. I'm not one of those. And, there's a lot of, people, and Nigerians do this as a great job. They watch, the calls and the put buying to, for, basically looking for where the insiders are putting money and then trying to follow, thinking that everybody in the option markets knows something. Some people might, but it's still, I think, like finding a needle in a haystack. And I've never been a fan of really watching it because I'll give you an example here. My friend Chris, huge trader, and he was putting on a hedging trade in one of hedging with options in one of these, in a stock,
thinner stock,
and in a stock, and he's putting on. It was a hedging trade for him, and all of a sudden, he looked, and they were talking about his trade on CNBC. They were literally talking. He called me up. He's like, they just talked about my trade on CNBC. He's like, it's a hedging trade. And they were like, oh, somebody knows something here because look at this huge trade. So a lot of times these are actually hedging trades. It's institutions that are hedging risk. They're doing different things. I would say probably 90% of your big, buying of calls and puts is probably hedging activity. So, there's nothing to that. There's nobody knew anything there. So yes, sometimes, and you can always point out in hindsight, oh, there was some big call buying here. Look at it here. Well, there's big call buying and put buying in a lot of things. So you can always cherry pick, when they have the big call buying and the put buying. And, it may be, and the Jerry Brothers, like I said, are good at this, and maybe they've got, a system that they've developed, they've made money over time. So obviously, they've developed it. But I'll tell you, from my experience, it's very difficult to differentiate hedging from somebody who actually knows something. And, I say 90%, I'd say like 98% of the options are probably clean. So you're trying to look for the 2% that somebody might actually know something. Difficult gig. It's a difficult thing to do. I've never found an edge there. I've tried. 18 years, I never found an edge there. So I don't look at options. I don't look at options for indications because I think it's like trying to find a needle in a haystack. And I feel like there's a better use of my time.
And you don't know. I mean, they could be, besides a hedge, they could be covering a winning position.
They could just be gambling.
Yeah, they could.
You could just be gambling. Like they think, there's a big decision coming out. We know the solar decision's coming out. There's gonna be some people making a gamble. There's just some gamblers out there with some big money too. So, speculation right at its best there. So sometimes somebody might know something, and maybe some of those are blatantly obvious, but a lot of times you look at these big option positions, they don't know anything. And so here you are trying to find the needle in a haystack. I like to take things at face value. That's why I'm an order flow trader. I see, that there's 500,000 shares to sell in Snap yesterday. Stock's going down. Here's some information for you. This is public information you can use. Look at Snap yesterday. Went straight down. So, there's somebody selling. That's institutional money that's driving stock. So, and that's a consideration. That's what I like to look at. I think people try to make trading so complicated. They try to, everybody's cheating. They think, the markets are all rigged and we're trying to find everything. But I really think there's, good opportunities in, just taking information at face value and trading on it. I mean, I keep it simple always. I'm always looking, at order flow, at size, okay, well, we got a big iceberg order. He's not moving. This guy wants to sell some stock and it's going to take a lot to chew through him. There's a good chance it's not going to get through it. So, and this is all information you can use that's a little bit simpler. So, props to the Jerry Brothers because they've developed a system that has worked for them. I have not been able to do that in options, and that's why I don't do it.
Just real quick, double top in GE. If you're looking for a continuation of this move, 2502, 2506. Those are your September 5th and 6th highs. So coming in expiration, also look for some of your open interest in options. Second thing to emphasize, Dennis' point, remember everyone was making a big deal about 50 cent. 50 Cent was in the options market and buying all these VIX calls, and whenever they got to the 50-cent area, a big deal. But you know what? The guy might be hedging like a $42 billion long stock position, right?
Oh yeah.
So he doesn't even care. So that's a great point to make of the options. What's going on? What if they're doing stock? What if they're just trying to lock in a small gain on something? A lot of arbitrage. So
there's a lot of different things happening there. Not every big option buyer or seller is somebody that knows something. That's the point I'm trying to make. And, if you've developed a system that's worked for you, I'll never argue, if it works for you, continue to do it, because, there's some things that just don't, work well for certain people. Never been my style. I've tried, I tried a lot of different things. When I first started trading in 1990, I started trading in 1996. But when I started trading with Bright in 1999, like doing it as a career, I tried a lot of different things before I found some systems and some edges that worked for me. I was trying the pattern trading and getting in there and looking, and I had, filters written, so scanners looking for just cup and handles, and it would just spit me cup and handles all day long. Tell ya, I didn't make hardly any money with that. I hear you say, oh, it's a bullish pattern, this is going to work out more than it's not going to work out. Didn't work out for me. I tried them exclusively for a good few months in there, just trying pattern trading. And, I couldn't. Now, that was on an intraday basis, so a little bit different. But, there's some good pattern traders out there. JC is a good technical trader, and it's worked for him. Technicals is one tool in my toolbox, but not my focus. I will always say I'm more of an order flow guy. So I like to look at order flow. I like to look at, big orders in the book. I like to look at, where the size is. I like to look at, imbalances in the morning. I like to see where the big money is moving, because I always figure, the big fish is what really moves the stock at the end of the day.
All right, 8:36 now. Time for our first break of the day. We're going to grab Ron Bienvenu. He's the managing member of Spearpoint Capital Management in New Orleans. He's an activist investor. We're going to talk about his commentaries on the market and any positions he's in right now. So we'll be right back with Ron Bienvenu. Welcome back, everyone, to Benzinga's Pre-Market Prep. We're on the line with Ron Bienvenu. He is the managing member of Spearpoint Capital Management. Ron, how's it going today?
It's going great. How you guys? It's been a while.
Yeah, it's been a while. We're doing pretty well. So you're an activist investor. Explain to us at a high level your activist strategy.
Yeah. So Spearpoint is a special situations activist investor. We look for industries that are struggling. So our macro view is looking for out of favor industries, companies that have heavy asset recurring revenue, heavy asset base recurring revenue, but for some reason are not unlocking the value of those assets. We take a position, and then we try to work with management and the board to implement change. And if we can't get management and board to cooperate, sometimes we'll try to get a new management and board. So that's kind of our approach. But we really are like a special situation. We specialize in the small end of the market. So even though we're an activist, we're generally looking at small cap, micro cap situations where we think there's not a lot of attention being paid. So there's higher volatility, but there's we think more reward in the long run if you can get it right.
So I guess why do you focus on small out of favor areas of the market that most people don't even think about?
Well, I'll tell you why. Because of Sarbanes-Oxley. In 2002, when Sarbanes-Oxley was passed in reaction to Enron and WorldCom and other fiascos, one of the many unintended consequences of that law was that board members had to take personal liability for certain situations. So what happened was a lot of your top high talent, high quality board members said, I'm not doing that. So they left. So what Sarbanes-Oxley did had the perverse effect of gutting high quality board members in many cases from small companies. Sure, I'll sit on IBM's board because IBM can pay for lawyers forever, but these small companies, it's just a lot of risk taking. So that you lost, and our argument is that you lost a lot of high quality board members that gave a lot of power to the CEOs. And another effect was banks stopped writing coverage. You know that 66% of all the companies on the NASDAQ and the New York Stock Exchange have zero analyst coverage. So basically, you handed the keys to the CEOs and the management team saying, here's a $100 million company, and no one really cares about it. And your high-quality board members, in many cases, have left. So you don't have pushback from the board. And they ran these things like personal piggy banks. And we call them King Air companies because they go out and buy a little King Air and fly to their vacation homes. You don't want to buy a jet. It's a little conspicuous. But so you had a general lessening of the quality of boards across the lower end of the market. But these companies are still very valuable. And then, so the other problem though, was that you had to be an activist, to be an activist can be very expensive. And so it's hard to justify spending, millions of dollars on a fight with a company when the upside is just a few $1 million. So you had the economics involved. So these management teams got very fat and happy knowing activists aren't coming after them because of the cost. And they can control their boards. So in 2008, the SEC passed a rule that allowed for electronic communication instead of hard copy, which dramatically lowered the cost because you don't have to mail a letter to every shareholder every time you did something. That really wasn't tested until 2012 when Netflix CEO Reed Hastings posted on his Facebook page that Netflix had passed 1 billion downloads. Lawsuits, that's material non-public information being disseminated in a non-public way. The SEC, the courts said the SEC ruling in 2008 is too obscure. Come back and fix it. They did. Hastings is let off. A month later, Carl Icahn is tweeting he's meeting with the CEO of Apple. It ushered in a whole new era. But most importantly, and not recognized, is that the cost of being an activist, one of the biggest costs, was information dissemination and acquisition, both of which have practically gone to zero. So it's more cost effective today than ever. So the perceived cost of being an activist is no longer the real cost of being an activist if you do it in the right way. And you have a target rich environment of a bunch of fat and happy companies where they really haven't been responsive to shareholder value, and the boards have really let, of course, there's many great small cap companies. I'm going to talk about a few, I hope, today. But that's why we thought that there's a real underserved market that we could dominate and at least participate in and be very successful with. And it's been a lot of fun, and it's challenging, but it's fun and it's interesting.
All right, now let's get to some of those names. One of them that interests me, ShotSpotter, SSTI. This is one very interesting name. Is this a recent IPO? I can't remember if they're a recent IPO or not, but they're the gunshot alert detection software company essentially that from what Benzinga reporting has told us not been super effective with the police departments who've been using it. So what can you tell us about SSTI?
Well, you're right. And you're in Detroit and I'm in New Orleans, so we certainly have our fair share of gunfire. So what we like about it is, first of all, we like the space. We think that the Trump administration is going to continue to spend on public safety. And so the federal government is going to push more dollars into the system. We like that lift all boats. ShotSpotter is a recent IPO, and I have met with the management team on a number of occasions. I like the space a lot. There aren't a lot of small cap public plays in the public safety arena. It is interesting technology. Basically, it's an array of sensors in place across cities where they capture and they can identify a gunshot and locate it, triangulate it, and locate where it came from, dramatically lowering response times by the authorities and giving them more situational awareness as they arrive. So I like that a lot. I think you got a good management team there that's got it. I also think that they're looking at it as an operating system where they're, if I may, one of the things we look for when we're looking at companies, I have a technology background, and we have 4 criteria we look for in an interesting company in the tech space. Unique, non-replicatable data. If you think about Facebook, Instagram, all the big guys who came out in the last 20 years, Google even, they're capturing data that's non-replicatable and it's valuable. And they're understanding that the value of the data is more valuable than any product it's related to. So unique, non-replicatable data, a network effect. The more people using the system, the more valuable the system is for everybody. Recurring revenue. Well, as investors, we all know that's gold. High gross margin and high renewal rates. ShotSpotter is very sticky. Once it's put in, it's hard to get rid of. So you got high renewal rates, you got high gross margins once the system's installed. You've got unique data. No one else has this data. The data they can capture, and they can leverage that network to capture other types of data in the future. And I think that's their vision, and I think that's compelling. The network effect. The broader the system, the more valuable all the data is for everybody across the system. And they have a recurring revenue stream. So they certainly haven't performed well coming out of their IPO, in June. But I certainly like the space, and we are very involved in it. I've spent a lot of time in the last 6 months studying the space, working with a number of companies in the public safety arena, and ShotSpotter has a shot, so to speak.
But the technology has to work, though, right? I mean, I've seen reports where they've identified dump trucks as gunfire, so it has to work.
Yeah, you're going to have some false negatives, and that is a real problem. And if they don't fix that, I mean, on the initially in a smaller scale, it was working pretty well. There are some growing pains, no doubt. And again, I have not invested in this company. I am just looking at the space, and I just find it an interesting company. The technology has to work. They have to deliver. But as an operating system, as a play in the public safety space, if they can figure out how to make the technology work bulletproof, and it has to be bulletproof, but there's a lot they can do with this network of customers they have in these cities if they can figure it out. So, but of course it has to work, and you don't get a lot of false negatives chances because eventually people are just going to shut it down, and it's not a cheap system to set up and manage.
All right, let's get to another one. What about GVP, which is GSE Systems, which I believe is like a nuclear sort of nuclear power or something?
Yeah. So GVP, GSE Systems is one of our posted children for what we do at Spearpoint. We identified the company after 2009, Fukushima. The nuclear industry was dying. The company was struggling. You had a kind of legacy management that was kind of doing old school stuff and not very visionary, kind of run as a personal project, just kind of doing whatever they wanted to do. We came in 4 years ago and took a big position. We were the largest shareholder, and we worked with the company, and we replaced the chairman of the board and several board members and the CEO. We brought in a tech-centric CEO. But what GSE does is they build simulators for nuclear power plants. So for training, testing, security, safety, they're in many nuclear power plants, and they've expanded into servicing those nuclear power plants, staffing, so engineers, safety personnel, et cetera. So they are highly specialized in the nuclear space, and brought in a new CEO named Kyle Loudermilk. And the guy has been a rock star. He'd never been CEO before of a public company, but had been COO of some very interesting Aspen Tech and MicroStrategy. And the guy just hit it. I mean, he cut 25% of the operating budget the first 90 days on the job. cut a cost, cut waste, reposition the company. And the company today just announced earlier this week, they announced a fairly sized acquisition that will drive their revenue above 100 million. We estimate their EBITDA going forward will be about 10 million. And it's just been a case study in what we like. They have a unique, non-replicatable data, network effect, all the things we like. So it's been performing really well. It took 4 years, and that's the other thing that people have to understand. We're very patient. We don't need to be in and out. But this has been a great one. We think the stock should go above $5, based on our math as to where we think the value of the company, and it could go much higher. Again, you bet on people. This is a people play. We've got a great team in there. Chris Sorrells is the COO, is a superstar as well. So it's a very interesting company. It's a very interesting space. Execution has been, you can't ask for better in a small company like this. And we're very optimistic. We've been long-term holders, and we don't see any reason to stop holding at this time.
All right, GVP and SSTI, two names Ron Bienvenu is keeping an eye on. Ron Bienvenu is the managing member of Spearpoint Capital Management. Ron, thank you so much for joining us today.
No, my pleasure. Thanks, guys. Bye.
Have a good one, Ron. All righty, 8:50 now. Dennis, can we get a quick imbalance look?
Let's take a look. What's jumping out here? Financials, a couple selling, but Bank of America, 63,000 to sell. Man, they're small here. Nobody's showing their hands early. And you know what? This has kind of been the theme here for a while. It's such a market, where you're not getting major movement. So the institutions are waiting right till the last second to try to put their orders in there. So really, when you're looking at these things at 8:30, 8:50, 9 o'clock, you're not seeing a lot. You're only seeing the institutions that are putting their orders out there early. And nobody wants to do that because they're scared they're going to move the stock. So you're not really seeing much. Like yesterday, we saw that big seller in Snap, which was a rarity, and that was actually a nice tip-off. S&AP is 30,000 to sell here again. U.S. Steel X, 25,000 to sell here. That got downgraded today at Cowen, so that's the reason for that. Man, they're small, Spencer. Just not a lot happening in balance land. Alcoa, 22,000 to sell. That got downgraded too. Small. All
right. Just talking about the general market too. I mean, we've been in a trading range, going back 20 points, Dennis. If you want to go back to September 12th, and that's a 1, 2, 3, 4, 5, 6, 7, 8, 9 trading sessions ago, we have traded in a 20-point range. Now we've zagged
for the entire nine sessions.
Yes.
I wonder I'm hating this. That's the VIX at 9 and VIX under 10. That sucks for trading. That just sucks as a trader. You want to see the VIX higher than this. It's hard. When the VIX is under 10, like you see these high frequency trading firms, some of them closing shop. It's hard when the VIX is under 10. It's hard. The volatility is not there. I mean, stocks don't move. It's hard to make money.
It is. So we covered the earnings. There wasn't very much. We covered the all the ratings. Did we get all?
Well, we didn't really cover the rating. There was more ratings there too. We covered EFX and X. American Airlines getting upgraded. Barclays, AstraZeneca, AZBRA-N caught an upgrade. Spencer, what else jumping out to you from ratings land?
Yeah, we mentioned the Equifax one, AstraZeneca. You just mentioned American Airlines. You just mentioned those are the only big upgrades as far as downgrades go. Nothing here. Alcoa downgraded Berenberg. U.S. Steel downgraded Cowen. That's really it. Tiffany downgraded Goldman Sachs. And those are really your big ones as far as initiations are concerned. Yelp and Group. Few. Yeah, I mean, D.A. Davidson, Yelp and Groupon at a buy. What else do we got? That's really not a ton going on in ratings land today. Citigroup, those aren't interesting names. Citigroup initiates TYLANSS and BLKB at buy essentially, and that's really it though. Not a whole lot going on today in ratings.
Quiet. Let's talk. So, and I want to talk solar here yet too. Maybe a couple minutes before we get Gordo on there. But let's go talk about this AMD Nvidia, because these things were absolutely wild yesterday. We talked about it yesterday. The CNBC story that turned out not to be true, that AMD was working with Tesla. We know AMD got the big pop after hours up to 1470. It's now come all the way back down here from where it was before. And you know me, I like to buy stocks when they've come back down. I still think that there's a potential for a deal here. CNBC usually gets their facts straight. So, maybe there's going to be a deal. Maybe there's not going to be a deal. It looks to me like the rumor was, or the story was not true. But, maybe where there's smoke, there's fire. I actually bought some AMD in my investment portfolio yesterday. I've used this opportunity on the pullback here to put in. So I'm now long AMD. It's been a long time coming. I've talked about buying AMD for a long time in my investment portfolio. And I did it yesterday. I pulled the trigger. So I don't know. I'm down a little bit in here. I pulled the trigger up around 1350, so I'm already down a little bit in it. But I don't know. Maybe I'm just reading too much into it. But I feel like that. I don't know. I've liked it for a long time.
So you finally did. No, you pulled the punch. I mean, there's great support at $12. I don't know if we're going to be.
I would have loved to get it back there. I don't think I'm getting all the way back there. That's what I was saying to myself. I was like, should I wait? Should I pull back? And then I'm, well, what if a deal does come get announced? That's going to be back up at 14.5. So I pulled the trigger. It's down here again today, 13.18. I don't know. Maybe there is no deal. Maybe it is going to go back to the 12 support. Maybe I'll buy some more. If it goes back down to 12, I usually don't add the losers, but I only kind of went in with about a half a size of my normal position on this one. Probably because AMD is a little bit of a wild child too, but I don't know. I'm in.
12 to 14. That's been your trading range since the end of July. You got right up to the top of that trading range on Thursday. So we'll keep an eye on that upper 14 handle. To me, that would really be a catalyst to the upside, close above 14. And now on the downside, you can see that support at 12. So trying to digest the move. I know NVIDIA got hit off that news. That stock 190, 120. You hit that earlier in the week, and then the seller stepped up at 190. So this thing is a little scary here between 170 and 180 as you went up just one bar on one day. So, and look at that. You also had like a triple bottom that it broke through. So if you do get a rally, NVDA trying to fill a gap or whatnot, 180 would be a nice target. Oh, where are we trading at? We are trading at 180.49. So right back up there. No, those lows are higher than that. No, 181. 181. I'd like to see a rally to there for a lower risk short. We have 3 minutes left here. Dennis, is there any major issues that you
Johan Smith wants to talk Twitter. He's asking Twitter. You know what? I'm almost ready. Like, I just look at this and I kind of want to pull the trigger for a swing trade on it. I don't know why, but I feel like nobody's talking about it now. I always like it when they're not talking about them. It's had a little bit of a run up. It pulled back recently here. So, a little 50% of the most recent move, 1650 up to 1850 or it's 1750. You put in 2-3 lows here right now. I feel like, I guess it kind of took it out yesterday with 1735, but it did bounce back up there. I don't know. I'm almost interested in it from a swing trade perspective, maybe with my out at 1735. Not as long-term investment, still don't like valuation, but short-term, I'm kind of interested here. I haven't pulled the trigger on this one, but I don't mind the setup.
You had a nice run up to 1849, and actually I did maneuver out of those 18 calls pretty good. I'm glad I did. And now, I'm looking at it. It's come down on lower volume, so just weak sellers, perhaps going into strong hands. But Dennis, I just what's the catalyst for this thing? It's is going to get a big upgrade, or it just seems like it's blah. You know what I mean? Maybe earnings report, maybe a pre-earnings run, and then it gets killed.
Well, we're a month and a half.
Yeah, so
it's a ways away.
Yeah, so you just buy a premium. I don't know. Nick would say, "Oh, just sell some puts and forget about it," but let the premium.
Well, the reason I don't do that is
exactly
a valuation in the long run still scares me here. So this was I was setting up when I was putting the AMD in there. I put in my long-term investment portfolio because I just kind of believe in the long-term chip story. I think chips are going into everything. I think AR. I think there's so many uses for chips, and I think AMD is kind of starting to figure it out here. After having a lull for a lot of years. So that's why I went with this one. I don't know if I believe in the Twitter. I might believe in the Twitter story, but not at this valuation.
And just to wrap things up for Bobby Bid here, looking for Tiffany to fall below 85. I don't know if it's going to 85. I'll say you got some major resistance at 91. Came down hard off the 94 level. So until you got above 91, I want to look for any, big move to the upside. Really consolidating over the last few days, and now we're taking out that 3-day low of 88.67. So I think you got a good shot there, but I think you got to leave it to over 91 for your risk to see if you can bring it in at 85. So we'll see what happens at Tiffany's. All right, Spencer, we're not going to end the show. We're going to have another
big one.
Yeah, we got another guest, and it's going to highlight a big decision today. Take it away,
Gordon
Spencer.
Johnson, Managing Director at Axiom Capital Management, one of the best, if not the best, solar analysts on the street. So we'll be right back with Gordon. Welcome back, everyone, to Benzinga's Pre-Market Prep. We're on with Gordon Johnson, Axiom Capital. Gordon, how's it going today?
Good. Thanks for having me on.
All right, break it down for us, Gordon. We got a big decision coming up today in the solar stocks, tariffs. Break it down. What's going to happen?
Yeah, so basically we have a decision coming today, which is they're going to decide if there's injury with respect to Chinese module manufacturers importing or exporting rather panels into the United States. We think there's a high probability that, in fact, they do find injury. We were at the SPI conference last week. We spoke to SCIA, Solar Energy Industry Association. They're a solar pundit in the market. And their discussions in DC suggest that the 4 members on the committee that are going to decide this decision today, 2 Democrats, 2 Republicans, it's actually the inverse of what you think. It's 2 Democrats that actually want to go forward with the tariffs and the 2 Republicans that are against it. That is a stalemate. The problem is, though, for the solar industry, if there's a stalemate, that means the decision is the injury is determined as a factor. So we think that injury will be determined today. We think it's very bad for the Chinese module manufacturers. We think it's very good for First Solar. We'd be buying First Solar ahead of this decision. We'd be shorting or selling the Chinese module manufacturers: JA Solar, Jinko Solar, Yingli, Hanwha.
What about CSIQ, Canadian Solar?
That's a good one. You notice I didn't mention CSIQ. We have a buy rating on CSIQ. And CSIQ is definitely a Chinese module manufacturer. So we think there could be some stormy weather for them near term. I think the stock could see some pressure near term, but we still really like the stock. And the reason is not because of their module business. We value their module business at -$1. They have a lot of assets that they've acquired, projects in both the U.S. and, more importantly, Japan. We think that they acquired those assets at very high IRRs. We think when they sell those assets, the market will get excited. We'd stay long the stock with the caveat that you could see some near-term pressure.
So hypothetically, what would happen if they don't find injury today for whatever reason?
Yeah, so if there's no injury found today, I think that would cause a rally in the Chinese module manufacturers, and you probably see a slight sell-off in First Solar. However, if they don't find injury, our view is First Solar is in big trouble, because what First Solar has done based on our checks, is they've delayed the ramp of Series 6 in preference for continuing to ramp Series 4, which is their current technology, to benefit from this temporary U.S. bull market. So if they don't find injury, that means First Solar's Series 6 technology, which was expected to debut in 2020 with the cost of 22 cents per watt, has probably been delayed by another year. Here's the problem. At SPI, we spoke to Longi. They're a Chinese solar manufacturer listed in Shanghai that a lot of people in the U.S. aren't aware of. They told us via their PERC technology that their cost per watt was going to be all the way down below 20 cents by 2019. The point is, if First Solar is targeting 22 cents by 2020, and that's the best case scenario, and Longi's telling us they're going to be below 20 cents by 2019, that means First Solar is going to get priced out of the market. They need to ramp that technology as soon as possible for their long-term stability. They've delayed it. This decision doesn't go their way. It's going to prove to be the wrong bet.
Gordon, do we know what time this decision's coming today?
I actually don't know what time it's coming. That's a good question. I should know that. I don't know the exact time. I would expect it's after market. They typically announce these things after market, but we're not certain there.
Okay. Because I also can find a time on that. Okay, so we are. Should they find injury, we are when I say we, I mean you, are very bearish Chinese solar names, and vice versa if they don't find injury. Anything else we need to know, and then we'll let you go.
Yeah, I think it's important to know we're not just bearish on the Chinese names. Think about this. So Sunrun and Vivint Solar, what they do is they basically install solar panels on your roof. They come and they offer you a competitive solution that basically is your decision, if you're smart, is based on price. So if this decision goes through and module prices are forced higher inorganically by the government, that means the value proposition for Sunrun and Vivint Solar has just declined. So if this injury is found and this thing goes through, it's also very bad for them. In addition, it's bad for SolarEdge and SMA, the inverter players. If you're a if you're a component manufacturer, you supply the inverters, you supply the racking and mounting. You're a company that supplies labor to install solar panels. If this decision goes through, the solar industry in the U.S. is going to decline significantly. It's also going to negatively affect the component manufacturers. So we'd also be shorting or selling SolarEdge, SMA Solar, and be cautious, very cautious on Sunrun and Vivint Solar.
All right, Gordon Johnson, Axiom Capital, thank you so much for the quick analysis. Well, I'll let you go. Thank you so much.
Absolutely.
All right. 9:06 now. That is our show for the day. So I got Gordon to break it down for us. If you want to listen to that segment again, you can do that by going to youtube.com/benzinga TV. You can listen to the show as it aired live. Also, our podcast will be up and usually about an hour after the show, usually around 10 a.m. Eastern. That's on iTunes, SoundCloud, and Stitcher. If you want to catch any part of our show, again, Gordon or our segment with Ron or anything else from today. But that is our show for the day. That's it for us for the week. Hope you enjoyed our shows. We'll be back with you folks on Monday. Have a good day, everyone, and have a good weekend.